Good morning from Los Angeles. How's everyone doing? Um, Welcome to the dating game between Jay Powell and President Trump. Yeah, so it's like that, the lovers put out flowers. He loves me not. He loves me, he loves me not. That's where we are. That's Today is one of those days. Today is like there are rumors that Trump is going to fire Jay Powell, and then he said they were unconfirmed. And what did the market do? Bond market tanked, stock market tanked, and then the dippers showed up and just opened their hands and bought it. Now the reaction in the bond market is still continuing. The stock market is not paying any attention, although the reaction was pretty swift of even the rumor of President Trump firing Jay Powell. I have my opinions about it. If he does fire him, the bond market's going to go berserk. Actually, I'm going to talk about that actually, shortly on a segment. But um, the bond market doesn't want lower interest rates. In fact, the bond market is pushing interest rates higher. Like regardless, the rates have been going higher in two countries, Japan and the U.S. That's because of the national debt, the debt to GDP. It is imperative you folks understand this, that when you're running 130% debt to GDP in the US, and in Japan, it's 250% debt to GDP, the bond market says, I need a return. All the new bonds you need to put out to cover this debt, I need a better return. Rates are going higher. It doesn't matter if President Trump fires Jay Powell, his dog, his wife, all of the Federal Reserve. It doesn't matter. He thinks he can tweet his way into lower interest rates. Not going to happen. Even if he picks somebody who is his lapdog, and that lapdog lowers interest rates, i.e., the Fed funds rate, because that's the only thing that the Fed can control, rates are still going to go higher. And when the 20-year note or 20-year bond goes above 5%, and we're pretty close, watch out. I'm telling you guys, watch out. All the stock market and this and that going making new highs, it's just going to be nullified. But my opinion again. So welcome to Trading with Sergio Wednesday edition. How's everybody doing? I am shorting stocks, honestly. I'm shorting stocks that are going parabolic to my dismay and to my detriment. Don't do what I do. What I do is very risky. Not going to, it's not financial or trading advice. So what I do is what I do. Um, you know, uh, uh, when you short stocks, they can go up forever. So I put a video actually out a couple of days ago about how to short, what to do with it. So you guys can go watch it and educate yourself about that. But yeah, today is an interesting day. We had a whipsaw when the rumor came out that Jay Powell was going to get fired, and then now Trump said no, maybe not. I don't think I will. I love him. He loves me. I love him. It's like, I don't know what's going on. But there was a taco trade this morning actually. So when the rumor came out, everything tanked, and then President Trump says, I probably will not fire him. I think that was his tweet. So this is what we're doing now. We're just running tweets. But the market is not going to like if they fire Jay Powell. And market's going to push interest rates higher and higher and higher because these knuckleheads in Washington don't understand there is a direct correlation between fiscal policy and monetary policy. Fiscal policy comes from the Treasury, and the Senate and the House and the executive branch. If your fiscal policy is that you're going to print and spend, print and spend, print and spend, the bond market's going to go, nope, not going to buy it, not going to do it. And the fiscal policy, right, that is all messed up is followed by monetary policy. And monetary policy is dictated by the Federal Reserve. So whatever fiscal policy is doing, monetary policy has to follow. Now, the monetary policy, what they can do is they can print money, they can add, right, fuel to the fire, they can lower interest rates. But if the fiscal policy is not supporting that, the bond market is not going to listen. Bond market's bigger than anyone, including 10 President Trumps. It doesn't make any difference. I don't think he understands that. I'm sure people around him tell him, because Mr. President, we can't just talk interest rates down. So yeah, that's where we are. And I am shorting stocks. I'm trimming some of my longs that are profitable. I'm being very cautious here. I don't want to get caught with anything. And I'm actually losing money on my shorts at the moment, but it's okay. Just create a balance. And if we keep grinding higher here, I'm going to probably be net short, probably within the next 3 to 4 days. But again, what I do is not for everyone. Don't do what I do. It's crazy. Although the scoreboard speaks for itself. Yes, I do go endure some pain when I short things, because when you short things can go up forever. It won't go up forever, but they could. So you have to be really nimble. You have to know what you're doing when you're shorting. It's not like buying something and then it'll turn around and go up for you. Anyway, so I want to talk about. I did put a really popular video. You guys can go check it out. About a month ago. It's called Japanese yen carry trade part 2. Is it possible? Nobody's talking about it. Well, I'm going to talk about it again. Not this time about the carry trade, but this time, what is happening in Japan? This is not, people are going to say, well, why do we care about Japan? Like, what do they have to do with us? Well, other than importing a lot of stuff from Japan that we do, you guys have to understand the dynamic between the US dollar and the Japanese yen. The Japanese 30-year bond is called JGB, right? Japanese government bonds. The 10-year, 20-year, 30-year, just like we have it here. 40-year now they have it. We haven't started doing 40-year, but you have to understand the relationship between global interest rates to figure all this out. Japanese interest rates were literally negative for 15 years because they had a deflationary cycle. Well, now they're out of that. Now they have an inflationary cycle. They had such loose monetary policy for 20 years that now, and they kept borrowing money. They kept printing and borrowing and printing and borrowing. Well, now they're basically where we are. And their interest rates, especially on the 20 and the 30-year long end of their bond curve, it's just skyrocketing. So you guys are going to say, well, what does that have to do with us? My mortgage is not on Japanese interest rates. Well, hold on a second, because there is a direct correlation of what happened. So when the Japanese interest rates were zero, a lot of U.S. institutions, a lot of hedge funds, by leveraging 20x, 10x, they went and borrowed money at zero. They brought it to the U.S., invested in stocks like NVIDIA's or Mag 7s or U.S. bonds, which were at 5%. So that's called the carry trade, right? We're taking it from there, carrying it over here, and then investing at 5%. Is it risk-free, though? Well, it's risk-free if the currency stays flat, right? Because there is currency risk. We have to convert our US dollars to Japanese yen, and then we have to do the conversion again when we get out of that trade. Well, for years, it went well until last August when it kind of went sideways. A lot of the unwinding of the carry trade happened, but now Japanese interest rates are absolutely skyrocketing. So if I'm a hedge fund and if I went and borrowed money in Japan at zero, came and invested at 5, 6, 7, or into the market at 20%, I'm swimming in cash. I'm doing fine. Plus, I leveraged it. But now, with the Japanese bond rates shooting up, well, it ain't zero now, right? Or even from short term all the way to the 30-year, their bond rates are going up. Also, no more carry trade, right? I can't go borrow at 3 there or 3.25 there, which you guys will see in a minute, the charts, and come here and invest at 4.5. It doesn't make sense. There's not enough room for me to avoid a currency situation or whatever not, right? So now let's look at it. It is really something to see, folks. So this is what's happening. This is on the left-hand screenshot. It's kind of faint, but you guys, can zoom in. This is the current 30-year Japanese JGB rate, 3.2%. Look where it was. Look where we are now. We were almost at zero. Now we're at 3.2%, and we're just shooting up. So the collapse of the Japan's bond market has been incredibly telling. In fact, we're beginning to see some similarities in the US as deficit spending accelerates. It almost seems like investors have lost confidence in the Japanese government's ability to pay down debt. Well, because now they're in the pickle that we are. The bonds are coming due. They were at zero. Now, when you have that much debt to GDP ratio, you have to sell more bonds. Well, the new bonds that they're going to sell has to be at 3.2%, right? So the Japanese central bank can do whatever the heck they want. If the bond market is not going to listen to it. Look where we are, 3.2%. Simultaneously, Japan's debt to GDP ratio recently exceeded 260% for the first time in history. Their debt to GDP ratio is roughly double the United States. We're at about 130, and I'm going to look at the second screenshot here. Ironically, the US is currently on a far more unsustainable fiscal path because the dollar amounts are a lot larger here. It's just early still. Well, look at this graph here. The blue one is the debt to GDP ratio, Japanese one. Believe it or not, folks, the gray one, which I've been talking about, saying that US is just a much bigger version of Greece with a printing machine, the gray one is Greece. You guys believe it? And the black one is the United States, and the red one is China. So basically, the whole world is printing. They're inflating, and that's why all these asset classes are going through the roof, like Bitcoin, like gold, like stock markets, right? But believe it or not, look at the Greece's debt to GDP ratio. Actually, it's been coming down last 2-3 years while the US is about to catch up to Greece. So maybe I am going to be justified when I say US is just a bigger version of Greece with a printing machine. Over the last year, Japan's 30-year bond yield has surged 100 basis points in 1 year. This created massive unrealized losses for financial institutions. Let me explain this to you guys. If rates go up, so each bond comes out at a par value, we call it, our face value of 1,000. Okay, when the coupon on it is 2% and interest rates go up to 3%, that $1,000 becomes $900, $850. So you have unrealized losses. But now you can say, well, Serge, you can hold it to maturity. Yeah, you have to hold it for 20 years, 30 years to get your 1,000 back. Because if you want to liquidate, now you have to liquidate at 850 because the coupon on the bond you own is 2%, but the actual interest rates are 3%. So the underlying asset price fluctuates wildly. Unrealized losses on domestic bonds for 4 of Japan's largest life insurance, because we're going to get into that in a minute, who's holding the bag here. 4 of Japan's largest life insurers quadrupled in 12 months to around record $60 billion in Q1 2025. Now let's take a look, and this is where you guys need to pay attention now. Now let's take a look at Japanese versus US yields. Since 2020, 5 years ago, the 10-year note yield has seen a 500% increase in Japan. This is just below the Japanese, this is in the US, this is just below the Japanese 30-year bond yields move. The green line here is the US rates, the red line is the Japanese rates. The US is flooding the bond market with so much supply to fund deficit spending that bond prices are falling. So when bond prices fall, that means interest rates are going higher, okay? There is an inverse relationship between interest rates and bond prices. There is pricing on bonds, just like stocks. When rates go up, bond prices go down. When rates go down, bond prices go up. And it gets marked to market. So, as I said at the start, the difference between the US 30-year and the Japanese 30-year is getting narrower and narrower. How's that happening? Well, the US 30-year is moving higher, while President Trump says cut interest rates by 300 basis points. Like, I don't know what kind of good stuff they're smoking at the White House. But now the Japanese rates have gone to 3.25%. We're right a touch above or below 5% on the 30-year. Their 30 years is catching up to 3.25%. Well, there's no more carry trade. We can't go borrow at 3.25 and come invest here at 5. It's not going to work. And last but not least, the loss of confidence accelerated after this data. The Bank of Japan's unrealized losses from government bonds hit a record of 198 billion in fiscal 2024. These are paper losses. You can hold to maturity and you should hopefully get your $1,000 back at face value, but in 20, 30 years, they have printed so much money that $1,000 you're going to get back is worth probably half. You guys get it now? So paper losses have tripled from the previous year's 66 billion. Yeah, because rates are going up and bond values are going down. Unrealized losses are rising at a record pace. Last but not least, to make things worse, the Bank of Japan owns, ready for this, 52% of all domestic government bonds, just like in the US. The Federal Reserve owns, that's how they flood the market with or try to lower interest rates. They'll go buy mortgage-backed bonds, they go buy treasuries. The Treasury issues the treasuries, but they can go buy treasuries. Figure that out. So in Japan, 52% is owned by the Bank of Japan. By comparison, in Japan, life insurance, other banks, and private banks and pension funds hold 13.5, 9.8, and 8.9 respectively. So in Japan, if you add 52 on all those numbers, about 85% plus of all bonds that are underwater is owned by banks and pension funds. The bonds crashing on fears of government collapse are mainly held by government itself. So the government itself is holding these bonds and they're eating it. And the bond market in Japan, just like in the US, they're not buying whatever the Japanese government is selling. They go, we have a problem, Houston. We're going to increase rates. You can talk all you want about lower rates, Mr. President, with all due respect, and to Mr. Scott Bessent. This is not the time to cut rates. We're at all-time high in everything. You cut rates here, asset classes will melt up, inflation will accelerate, and the bond market here is telling Mr. President Trump, not so fast, not so fast. Well, I'll show you guys the TLT chart, which is the 20-year bond. It's actually moving up. It's moving higher. It's pushing interest rates higher with the talk of President Trump wanting lower interest rates. So you guys now understand, could there be a second Japanese yen carry trade? The thing that you guys need to watch is the exchange rate between the US dollar and the Japanese yen. If the Japanese yen, because what's happening now is that because the Japanese rates are going up, the value of Japanese yen is going up versus the dollar. The number to watch is 140. $1 to 140 Japanese yen. You guys can all Google it, say Japanese dollar yen exchange rate. If we go below 140, Japanese yen keeps getting stronger because their rates are going higher. Watch out. Second part of Japanese yen carry trade unwind is going to happen, and this time it's going to happen in the trillions. So I'm not a doom and gloomer. I'm glass half full guy. I'm just informing and educating. I'm not saying this is going to happen, but this is reality. Interest rates in Japan are shooting up because their debt to GDP ratio, their fiscal policy is garbage, just like ours. In the US, interest rates are going up, although the Fed had cut the rates by 100 basis points. Since then, interest rates have gone up by 100 basis points. So with all this said, the bond market is too big to talk down. You cannot do that, Mr. President. You can want 300 basis point interest rate cut, he said yesterday. I'm like, good luck. If you do that, you know what's going to happen? All asset classes are going to shoot up. So buy Bitcoin, buy gold, buy stocks, sell bonds, because bonds are going to go down. Interest rates are going to go up. It's going to do the opposite. The bond market doesn't listen to anyone. It's just too big. So that's that. Hopefully you guys figured that out. Good morning, everyone. Let me put the link up if you guys want to come up. Where is the link? StreamYard changed. Is it here? Yeah, it's here. Okay. So this is the link. So now that we're done with that explanation, there's the link if you guys want to show up. I'll go through the positions. Like I said, I'm shorting stocks that are going parabolic. Do it at your own risk. Don't follow me. What I do is for me, not for you. I'm patient. I know what I'm doing. I've seen these things for 30 plus years. Although I'm cutting exposure on the long end and I am increasing exposure on the short end. When I say I'm shorting things, I'm not shorting options. I'm shorting physical shares. I did a video. You guys can go check it out. Yeah, that's where we are. Good morning, everyone. So let's go through the positions real quick. Let's remove this one. Let's add that one. Yep, you guys can see. I've learned this shit pretty good now. Let's go. Let's go and take a look of what's going on. Give me 1 minute, folks. There we are. Let's do the private. Let's do that. Okay, so what are we doing today? We are same positions really. We are long 50. Well, there's some difference, but we are long 50 AAPU, which is 2x ETF of Apple. August 25 calls. We're long at 79 cents. They're about 80 cents, so that's about even. Fuel cell, I bought some more. October 5 calls. I don't know why, but I did. I'm also short the August 6 puts. Stocks acting weak, honestly. I may take my loss and move on that at some point. But I'm buying October calls. I'll hold those for a pop and then get out with break even. Here's the new short, Joby Aviation, JOBY. I shorted 1,500 shares so far. I will short more if it goes higher, obviously. But I also shorted Friday expiration, 2 days from now, 15 put. So this is called a cover put. You short the stock, you short the put. If the stock is below 15 by Friday, I get assigned, I get cover the short, make money. If the stock keeps going higher, I'm going to lose money. Actually, I'm losing money at the moment. 1531 is my average call. Stock is 1613. So, down about $1,000. It's okay. But I'm also short the puts at 45 cents. And if they expire worthless, what happens? My cost basis goes higher, just like a cover call. This is called a cover put. Next position is SoFi. I'm short 2,200 shares of SoFi. Average cost 19.50. Stock is 21.30. I have shorted puts weekly on this, raising my cost basis. My cost basis is about 20 and a quarter, I think. But it doesn't matter. Scoreboard is scoreboard. Scoreboard meaning, right? Account equity. And I shorted today. I shorted Friday expiration 20 and a half puts. Next position is SoundHound. I will trim this position. It's not acting that well, but we'll give it a chance. I'm short September 13 puts and long the September 15 calls. It's a synthetic, almost 2-to-1 synthetic. Next position is TSSI, TSS Inc. long. These are long, 2 shorts, 3 longs. So I'm trimming on the long end as well. TSSI stock is 21.25. I'm long. Well, I'm short 15, 15, and 15. So this is a long synthetic, obviously. Synthetic meaning short to push, long the calls. But I'm not long the calls. I'm short the August 20 puts. The cost is 261. They're 235. So that's a good thing. That means if I'm short puts and the price is lower, that means I'm ahead. But I'm also long a call debit spread. So I took the money, not all of it, about a third of it, and went and bought me a call debit spread, 22 and a half 30s. And so, yeah, I'm short 15, long 15, and short 15. My average cost on the puts is 261. So in August 15th, if the stock is under 20, I get assigned. My cost basis will be 1740. I will take all the shares I can get. Actually, I want to add to this position. I was long going into today, 2,000 shares of WeRide. I trimmed another 1,000 shares. I have another 500 shares to sell. I do not like the market at this moment. Yes, market can go up. It can melt up, do whatever. We'll manage the gains, the losses. The point I'm trying to make is it is frothy here. So we can go to the charts real quick. Yeah, this is what the S&P did, but let's go to the big charts. This is the S&P 500. This is the daily. Nothing to see here, folks. Beautiful chart. We'll go to the 2 minute. You guys will see he loves me, not part. This was that part. the rumor came out that he was going to get fired. Jay Powell is. Well, now we rallied, took it all back to exactly where the open was. Same thing with Triple Q. Yep. So we sold off and came right back. I'm long Apple, but AAPU, basically, which is that. Oh, we just got a little downtick. I don't know why. Yeah, so this is the SPY. Anyway, let's look at fuel cell, which I am long, begrudgingly. That's the 2 minute. Why am I looking at the 2 minute? And here's the 1 year. Yeah, I mean, it's into support. I don't mind owning the shares. Rewrite, I'm trimming. TSSI, I'm long. We'll look at the shorts last but not least. This is TSSI, right on support. I shorted this before, as you guys can see the labels, and made like 4 or 5 points on it. Now I'm going long, reversing basically. Yeah, I mean, resistance is about 22. If we get above 22, I think this will run to 25, 26. So we'll hold the position as is. And okay, let's look at the shorts. SoFi short, 2,200 shares, grinding higher. These are all the short labels, right? But I'm also shorting puts. So if it does drop, it will automatically cover my short. But this is, again, something I do. I do this counter trend shorting. Actually, let's get rid of these labels because it's just too much. Counter trend shorting is not healthy, but they do work. But you have to be patient with it. Have patience with it, and you have to know what the heck you're doing. So when the reason I do it is multiple, obviously, but when a stock is 100% above its 200 EMA, trees don't grow to the sky. This may give me some headaches, but I'm only short 1,500 shares, so no problem. What did I do? Yeah, so 500 more we ride. Sounds good. Yeah, I'm trimming longs, taking profits. I can't. Give me 1 minute. And yeah, Joby is the new short. Started shorting this morning. Look at that parabolic move, guys. These things don't end well, but it's okay. I will short another 500 shares today if it keeps going higher, and short the puts at the same time. And yeah, that's where the positions are at. There's other things to short for me. I can go through some watch list stuff. So this is Apple daily chart. Building a bull flag. That's why I'm holding the AAPUs. AAPU meaning 2x ETF of Apple. On a breakout, I think that will be a really, really profitable position. So we'll hold on to those. What else we're going to do? Amazon down 3 today. Huh. Okay. Rigetti is breaking out massively. While I was dicking around with my shorts, I missed that trade altogether. It gapped up above the wedge, actually. Gold held the wedge. We're definitely going to put on an NUGT trade any second here now. This is TLT, folks. This is what's happening, right? This is interest rates going higher. So TLT is an inverse indicator. If TLT is going down, that means interest rates going up. This is the 20-year note. If the 20-year goes above 5%, like I said, watch out. Doesn't matter what you own, it's going to go down. Bitcoin obviously snapping right back to, it went to 123, sold off to 117, right back to 120. Coinbase, obviously, beautiful chart. Strategy, all these charts look beautiful. Today's big mover is Circle. I had the strangle on, I covered that. Not CRCL. Yeah. Came right into support at 20 EMA, held it, hugged it, and then now we're moving back up. I will put another strangle on this thing. And not yet, though. Yeah, I mean, all this is correlated, folks. Bitcoin, Ethereum, they're all going to go higher because we're going to keep printing and spending. That's what we're going to do. This is ETHU. This is the 2x ETF of Ether. beautiful move today. I think Ethereum is about 3,100. One of my long-term stock portfolio stocks melting up today, 34. Unity Software. If you've been watching me enough, I bought this about 21 and a half. Yeah, I like Lemonade a lot. It's just consolidating. I think it's getting time to take a look at that for sure. Lemonade, not Lemonade. They don't sell lemonade. It's an insurance company. I mean, there's really mixed bag today. Meta down 8, and Amazon down 4. Microsoft unchanged, but then things are moving. Micron pulling back, AMD going higher, and another one. And this is AMD, right? So a lot of cross currents. AMD earnings are, I think, August 5th, so be careful with that. What else is going on? Palantir, I think by a little bit, new all-time high. Yep, by just a touch. Hood, a new all-time high. No, Hood. Yep, new all-time high. QBTS is D-Wave Computing. That is going to have a massive move. That's kind of ARQQ is having a massive move. Quantum stocks are back in fashion, it looks like. But Rigetti had some news in the morning. It popped open $1, now up 40%. 31%, sorry. Up almost $3. There's no such thing as missing a trade, by the way, folks. And then Qubit. Quantum computing, these all just consolidating before the next leg up. So time's coming up. Reddit. Yeah, Reddit is pulling back into support. It's something to look at. The other one is watching Lululemon real closely. Yeah, retesting the lows while the MACD potentially is going to throw, but you got to wait for that to take place before you do it. MACD bullish divergence is forming there. Rocket Lab going higher and higher and higher. It was recommended. ASTS, same thing. All these stocks. I mean, ASTS could be a good short, actually. So retesting a high with MACD non-confirming. So we need to pay attention to that. And SoFi we talked about. SoundHound. This is SoundHound. That was disappointing. I mean, it's into support now, so we'll just give it a chance. I'm long the synthetic there. I'm short the puts, long the calls. Tesla doing well. It's just in a trading range, really, just going sideways. Yeah, I mean, Unity Software is that one. The one, my investment account. We're now green. Let me sell my last 500 shares of this thing probably and get rid of it and be done with it. Ooh, big move. All the way to green. Okay. We'll just hold 500 shares for entertainment purposes. What's my cost on that anyway? Yeah, my cost is all over the place on that. Yeah, that's where we are, folks. So I'll go to the front, answer some questions. We're holding pretty much as it is. Add to the shorts if they keep going higher. Yeah, add to TSSI for sure. Sell puts, buy calls, and sell calls. We ride. Yeah, I'll take a look at Pony, what that's doing. Not doing much. Okay. Yeah, we'll sell that at 860. Be done with that. Sell the last 500 at 860. Clean up house. Good profits. 770. I think 770 is my cost. So order is in. Okay. What else we're doing? Should we short more? Yeah, no, we right. That's done. Now I can go to 10. No, just kidding. I can always buy options on it, so I'm not going to be concerned. I will short more Joby, but where could it go? You guys are going to say, why do you keep shorting? It's just skyrocketing, going parabolic. I mean, I don't know where it could go. It could go, I guess, higher. But when the parabolic ends, it ends in tears. So there's a big short position. Watch the volume on that. It's literally 120% above its 200 EMA. There's a big short position. There's a gamma squeeze also going on, but you got to be patient with these. That's why you don't go shorting hog wild. Short 100 shares, couple hundred shares here and there. You just build a position. And that's what we're doing. And that's what we're going to do. So that's that, folks. Let me go to the front, answer some questions if you guys have it. No questions? Okay. Short and sweet today. I appreciate the support. And no questions. Okay. I will see you for... any Tesla plays or TSL plays you would do right now? Right now? Let me take a look. Probably not right now. But let's take a look anyway. Not Tesla, TSLL. Hopefully you understand what you're buying when you buy TSLL. It's not just like the 2X ETF. There's massive slippage on those. No, not right now. It's just going sideways. I'll go with a breakout, though. We have a little wedge we're building here. So I don't want to draw lines, but there's that, and there's that. And, I mean, not right now. But if I were to, I mean, if you're bullish on it, right? Again, none of this trading financial advice. You look at Tesla. What is Tesla doing? Tesla is also going sideways, right? It just has the same wedge, same look. It's going to either break down. The only thing I don't like is MACD's under zero. I don't like that, but Tesla is weird in that way. If you think it's going higher, I think it's just going to go sideways a little bit longer before it breaks up or breaks down. Do a synthetic. Easy play, man. Sell the 12 puts, buy the 12 calls, be a man. Don't just go selling cash secured puts. Just turbocharge your position. If you're bullish, sell 12 puts, buy 12 calls. You'll do it with a credit. But you must be willing to get assigned. That's what I would do. But at them right now, no. Just going sideways. When it's going sideways, especially with options, you need to be careful, right? You need to be right in the double D's, duration and direction. And you have to time it correctly, unless you go out to September, maybe. By September, if you're bullish enough, that's what I would do. To be honest. What's to be honest? Okay. To be honest, I do have about 70 sell puts at 10 expiring December. Shit, man. You must have gotten stuck. You must have rolled. You must have gone all the way out to December to create the roll with credit. Bro, you must be one of those wheelers. I don't know. I don't know what to say. December is a lifetime. So, good luck. That's all I can say. I bet you that's what happened. I don't know who you are, but I'm kind of thinking that's what happened. You got in trouble on the way down. You had to roll. You didn't want to take the losses. You rolled out to do it with a credit. You probably were short 11s or 10s or 12s. I don't know. I mean, hopefully things will turn out for you. December is a long time, my man. That's a lifetime. Hopefully it'll work out. That's all I can say. But other than that, again, we'll see you guys tomorrow, Thursday. Trading with Sergio, Thursday edition. 10 a.m. Pacific, 1 p.m. Eastern. And we'll go through the same thing, see what happened, how much money I lost with the shorts, how much money I made with the longs. Who knows what's going to happen. I am, I don't like the market here. Yes, it's grinding higher. Yes, it's doing this. Doesn't mean the market's going to go down. It could just go sideways, gain some strength to go higher. Although if Trump does fire Powell, the market didn't like that at all. And I don't either. I don't think he should mess with it. I think the Fed is independent, people, and let them do what they want to do, man. I don't know when the earnings are. Probably the end of this month, right? It'll probably go down because they're pumping it into earnings. When they pump something into earnings, usually it goes the other way. But I don't know. I'm short the stock, so I would like it to go down. Nobody knows. Nobody knows where stocks are going. We just do what we do, and then you take small hits, you take bigger gains, and you'll be fine. It looks stock is just making all-time highs. I mean, what is there to say? I looked at a couple of analysts, not comments, but price targets. One is 17, one is 21. So somewhere here is a little overdone, but you know what they say: buy on rumor, sell on fact. When the earnings come out, they'll probably get a little weaker, but stock is a beautiful uptrend. There is no question about it. So, yeah. All right, folks. I'm gonna go have a cup of coffee. It's been already a long day, and deal with my shorts. Not shorts, the stock shorts. Again, thank you for the support. If you want to join my members group, please click join. Send me an email, Sergio@sergioavedian.com. I'll send you the Telegram chat group link. And today you can come and watch us do a members-only live stream where I do one-on-one sessions with them. A lot more personal than the usual one. Okay, one last question. Let's squeeze one last question. Sergio, do we have time frame that you follow? You do synthetic like minimum? Yes. Well, depending on the pattern, like the setup, like for example, Rigetti, I missed doing it. We were in it, and then we took profits, and then now it broke out. What I tried to do, like I said, in options, when you're doing a synthetic, you have to be right in any options. Forget synthetic, strangles and straddles and whatever you're doing. You have two Ds, right? Well, three Ds too, but let's say three Ds. You have the first D is direction. Okay, you're bearish, you're bullish, direction. You have to be right on direction. The second one is duration. That's when your expiration date comes into play, right? But if you're in a setup that a stock has been going sideways, 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 about to break out, then you can squeeze it to maybe shorter term. So you don't want to pay that kind of premium and the more bang for your buck, because once it breaks out, it's going to take off, like Joby did, or like SoFi did, and things like that. And it also depends on the beta of the stock, right? If it's really volatile stock, you want to go shorter term with the synthetics because you're going to be in it a few days. It's a swing trade. If it's slower, lower beta stock, and you expect an extended move, maybe it's coming off a 1 year base, and you want to be in it for 2 months, 3 months, then you go out. So you figure out the direction. Let's say it's up. The duration comes into play. What kind of setup you're coming out of? Are you buying something on an uptrend already in a pullback, like lemonade? If I was going to do a synthetic on lemonade, I would go 1 month out max, right? Because it's already in an uptrend. I'm just buying it on the pullback. Same thing is going to happen with SoFi. Same thing is going to happen with Palantir. Same thing. When they do pull back into support, which they often do all the time, then you just kind of go shorter term. If you have a stock that's been basing for a year, 6 months, and now we're coming off a base, well, off of the longer the base, the longer the move, the duration and the direction is going to be, then you go out further, 2 months, 3 months out, and then you hold on to the position. That's what I would do. That's what I thought. He loves me. He loves me not. He loves me. And that's Powell. Trump goes, I hate him. I hate him not. I hate him. That's where we are in Washington, folks. I did. I have it on positions. Go watch it. Two of my positions are synthetic SoundHound, and one is August, one is September. Go look at the positions. August, because I'm expecting a bounce. I just want to play a bounce on TSSI from 20 to 25, and I'll be done. Short the 20 puts, long the 22.5 calls, short the 30 calls. On the other one, on SoundHound, I'm short the 13 puts, long the 15 calls. But I went out to September because I think it could be like an extended little move here, maybe up to 17, 18 range. So pretty simple. Go look at the positions. Today I'll post the positions, by the way, on the community page of the YouTube channel. Every Monday, Wednesday, Friday, I post them there. My members get every trade live. When I do it, I'll post it immediately on the Telegram chat group. And at the end of the day, I'll post my existing positions, total positions, screens. So that's where we are. Okay. All right, cool. I'm definitely going to leave now. So SJ Tavares, go look at the positions. You'll figure it out. And then look at the chart and then say, oh, that's why he's doing this. Oh, that's why he's doing this. Look, there's no guarantees, obviously, to any of this, but that's what I like to do. You're welcome, sir. Okay, cool. See you guys tomorrow. Trading with Sergio, Thursday edition. And then we'll have Power Hour on Friday. I'll post my mini Robinhood account. It's getting hurt today a little bit. I'll post my mini Robinhood account that I started with $1,000. That as well. I'm going to start posting that every Friday on the community page as well, so you guys can follow that. That's it. We do it with full transparency, losses, gains. I got nothing to prove. You like it, you like it. You don't like it, sorry. Anyway, we'll end it here. We'll see you guys tomorrow.